Greetings, Dr. Jeffrey Scott. Thursday, January 15th, 2026. As I mentioned earlier in the week, a lot of things happening with the Scott family this week. Most of the life will go on. I am going to be very busy with it's up in the air whether or not I'll do much of a video. I'm going to try, and those who've been with me for the 20 years I've been doing this know that 99% of the time when I say I'm not going to do it, I do it anyways. So I'll do my best. Um, Thursday was an interesting day. Taiwan Semiconductor early on gave some great numbers, sector the and the uh, things like KLA 10 core and others. So great day for semis. That jobless claims that come out and they were light. So it feels like we're in an economy where the job is hiring. So no hire, no fire. And I can tell you, as an employer of about 3,000 people worldwide that work for us, uh, we saw during COVID where the employer had no ability to control his employees. People were leaving for better offers constantly. The pendulum is switched, which tells me the job market's a lot harder and a lot tougher than perhaps the numbers are showing. And for those who don't know it, my email address is marketmripro@gmail.com. Our website's marketmripro.com. If we take a look at some of the charts to start before we get the spirit of education, not investment advice. The intent of this video and all the videos, trading involves risk. You're solely responsible for any investment decisions you make. I may own or buy or intend to sell any stock I mention. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. My Google group is really my mailing list. It's where I invite people to special educational programs. It's where I post things that I may not post on YouTube. And when I do post it in YouTube, I automatically post it on Top Down Traders so folks can get notified when things are out there for them to see. Know your news and earnings. So we have some industrial production and capacity Friday morning. We got Fed speakers like we had today. And what you're kind of hearing is consistent among most of the Fed are talking that the economy is doing well, employment is stable, and therefore there's probably no cuts until the new Fed person comes in middle of the year. And I think that makes sense right now. We start to see in the earnings side tomorrow some regional banks coming in. There wasn't much activity this evening. And the other thing is it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And we will have a big week next week after the Monday holiday for, I guess, MLK. For more information about my technology, software, and what I do, just feel free to email me. Any questions are fine. MarketMRIPro@gmail.com. For Market MRI Pro customer support, coding at group so you can get more cool stuff. All right, so great day in the market, kind of, sort of. If you look at where the Q's open, plus 1.6, well, opened at 1.14, traded up to 1.69 and ended up 0.36. That's not so great. That's kind of a reversal. And that was the theme. Russell led up 0.88, opened up 0.33, traded up to 1.5, and finished at 0.88, finishing right at 6. Dollar was up 0.37. As I mentioned, the Qs were up 0.36, really at the bottom of their range. And the spider was up 0.27, down in the lowest quarter. And volatility actually dropped. If we look over here, we could see the number of new highs minus new lows at 12 months increased on both the NYSE and the NASDAQ. Participation was great today, 71% of the S&P 1500, 53% of the NASDAQ, and 65% of the NYSE gained on the day. And if we look at what led, you might be surprised because Utilities, industrials, and real estate and technologies actually fourth place, 0.53. What lagged? Energy came off its recent move as perhaps there's a de-escalation in the short-term impact of Trump's rhetoric on Iran. Communications and staples was sort of neutral. If we looked at what themes were working, semis, silver, infrastructure, home building, transports, retail, Southeast Asia, solar bouncing back, robots, defense. What was not working, oops, was social media, fintech, biotech. Biotech got hammered. Software, oil exploration, biotech again, China internet. So why was biotech hit? It may have been hit for profit taking, but it may also have been hit because it's late and Trump is all over this new policy for paying for drugs. And they announced one of the projects, or two of the projects. So a lot of pressure on biotech. If it's the Trump issues, those will persist, and that means it could potentially get worse from here. All right, if we look at the timing model, well, disappointing is how I put it. Here is the spiders. These are daily. They sell on the daily. The others are in a buy. The Qs broke above the trend line and failed. That is not a pretty look. And that false breakout there, I suspect we have a risk of coming down some. And I'll show you other information of why I put some puts on some of my positions that had a lot of profits today. I'm getting fresh or something worse. We can see here the spider also opened up, closed down, solid candle. It was up on the day. Russell, probably the strongest of them, and the diamond looks okay, but we'll look at those in more detail on the index ETFs. You could see here on the weekly, everything's in a buy. So technically, we are still in an uptrend with a pullback on the Qs. And I'll show you again as we go why my concerns are mounting that we may do out there. If we look at the US indexes, oh, I did that too many times. You could see seasonality is generally positive here for the next few days or week, and then we pick up until the middle of February, and then we have some negative seasonality. If I look at the spiders, I don't really see anything that worries me too much. We had a reversal day here with a hammer, opened up, gapped up, which was 0.27, and we'll wait and see what happens. What I like is it's got the 17 as support, the 21 EMA, the 50 SMA, 100 SMA, and 200 are lined up perfectly. A pullback down to that 50 would not be unusual. We see it all the time, and nor would it mean that this bull market is necessarily over. It just means you might take a little bit of heat. How about the Qs? Above that trend line, and seasonality similar, a couple days of sideways that it runs up. And this one also, when you get to the middle of February, suggests some weakness. Finishing down on the session, actually finishing up 0.36, not down on the session, but way off the prior highs and back into the wedge. A break below that probably puts the 100-day back in play because the 50 is right here as well. So a little bit more worrisome on the Qs. The diamonds just off all-time highs, good seasonality, flat to good seasonality for a few more weeks, nothing nefarious there. The Russell all-time highs set again today, all-time closing highs set today. Nothing there to be concerned about. but a breakdown in the Qs or a pause is not likely to pull down the rest of the market. This is bothersome to me. The Qs, the VIX futures were down today 4%, but they're in this heavy uptrend. And seasonality says the Qs go up into that middle of February when the market sort of pulls back. So more reason to think that seasonality is not our friend, and maybe we're going to see some more market pressure. And the dollar strengthening here, no question about it, consolidating above that 50, but remember, way off of its highs. If I look at commodities, which have been the true stars of this market over a period of time, start with gold. Gold is consolidating right at all-time highs. Was it down today? Yeah, it was down 0.61. But no, look at that. It's open candle means it closed higher than it opened, and it's really just consolidating after setting, as you could see, all-time highs. If we look at silver, silver had a reversal day today at the open. Only down 1.47%. If this was a line chart, it would be down a bit, but you wouldn't see this. I think silver is just consolidating after all-time highs. Oil pulled back some after some cooling of what's going on in Iran. Natural gas, which has just been ugly, is this going to candle? It might be, it's off ever since we had the shooting star up here. The 10-year up 0.53%, while the 30-year was down. So the far end of the bond curve was stronger than the short end, down 0.19. So do I see anything that says run for the hills yet? No, I don't. The Qs bother me. Rather, you could see clearly the stocks are piling up on the right-hand side, and we're starting to get stocks above the Bollinger Bands, 14% in the NYSE, 8% in the NASDAQ, 13 in the Russell, and 15 in the S&P 1500. Those are not so high that you expect a reversal tomorrow, but you could get one. The breath tool that I use, and we just look at the last bar, and we look at the 13-week new high, new low at today's close. And you're going to see a green box light up here. 0.88 on the spiders, 0.87 on the Russell, and 0.72 on the NASDAQ. Except for the NASDAQ, all of them are getting to numbers that 1 or 2 more days you'd expect the market to have some issues. So I think we're getting close to a short-term top, but there's more. If I go back to that market breadth, these all-time new trading highs and closing highs today. And if you look at the stocks above the moving averages, and I'll show you how to scrunch that up using the wheel in a second, but we're getting to reversal area. And you could see that the new high, new lows, triple digit, AD lines, positive up, down volume. And it has had another bango, which is a lot of exuberance by the bulls. When you start seeing several days of bullish exuberance at all-time highs, you got to think that maybe we're piling on a little bit too much. When we look at the NASDAQ, we can see a very different picture. It's sort of in the middle of the range over the last 4 or 5 bars. It's not quite as extended, and it didn't have positive up-down volume and no bangos. Now, when I scrunch things up just by rolling the mouse, and you look at, you can see from the white, oh, I went too far, I apologize. From the white one, we are about as high as we get, and that's further evidence that we're probably getting closer and closer to at minimum a pause or perhaps something more nefarious. If we look at the ratio charts to just get a sense of what's working, pretty obvious. It's materials, energy gave it up some today, staples, strong, industrial, strong, Even real estate has turned up some. Now, sector timing on non-ratio charts. Now, this is not how you might look at a typical chart because I'm applying on these charts my timing model. And maybe we should look at the weekly model today. So let's see if that likes me. Ooh, it actually worked. Good. That means Praveen fixed it. So let's just go very quickly and see what we have. The weekly Bitcoin still in a sell, but it's making a move in a recovery. I make more money on days that Bitcoin are up than down, and I don't have any Bitcoin currently. Actually, I do, but not in my trading account. Technology, big run up, consolidating, still in a buy on the weekly chart. Discretionary has been very strong, still in a buy on the weekly charts. Communications was stronger, now sort of consolidating, still above the WMA, which is part of the timing model and the 21-day EMA, because that's what they use on industrials, certainly the strongest that I've shown you thus far, super strong. And if you wonder why some of these industrials are crazy, down trading, maybe driven by the industry and probably driven by data centers. Financials sitting on top of the moving averages does not look great, hasn't responded well to earnings, at least on the mega cap banks. Energy trying to break out on the weekly chart, but it looks a lot different than that industrial chart. Like materials kind of looks like that industrial chart. Doing great, all-time highs, I believe. And what's not doing well? Real estate perhaps turning around. Utilities struggling, but getting close to turning into a buy. And staples, which went through a period of negativity, actually breaking out here. Now, those ratio charts were hourly charts. And then healthcare had a nice run up, kind of consolidating here. And then this is Bitcoin again. So the interesting thing to me is when you look at the weekly and you look at who is not in a buy signal right now on a weekly, it's only utilities. But on the short term, it looks a little bit different. And in the short term, you could see technology has gone to a short term sell, as have communications, as have financials. And those are some of the things that had led the market higher. The other thing is to look at the same model applied to stocks and themes. So these are some of the stocks that are widely held. I have some. Now, Amazon was up today, bounced off of the 21-day EMA. If it's higher tomorrow, that might be a good place to start buying some. I have some calls that expire. Next one on the list is Apple consolidating here after a sell-off. Still, to me, no buy until it gets back above at least that 21-day EMA. Google consolidating after running up here with a shooting star at all-time highs. Almost a cup. Does it handle and break out? I think Google is the cloud right now is the AI winner with their assets. Meta continues to be weak. Netflix, oh, it's in the 80s now. At some point, it's got to become a buy just because of the price. But it's still stuck with Paramount versus Netflix over Warner Brothers. Tesla is struggling to get back above the moving averages. And NVIDIA popped today on the Taiwan Semiconductor news. There was another news piece that really hit the semis to the negative, which was 100% tariff if not made in the U.S. So I think that spooked them, and I think we saw the stocks fall in half during the afternoon. Microsoft, I wish to say Microsoft was recovering, but it continues to be a falling knife. No buy. And then we can look at biotech. You could see just the crazy consolidation we had here. Technically, it's still in the daily buy, but I keep lightening it up every time it pops. And I wonder if I've overstayed my welcome there. Pharma pulled back, and I think a lot of this had to do with the Lilly news, but notice it pulled back into moving averages and bounced, still down on the session. So both of them are still holding. Data centers opened, closed, solid bar, so reversal candle. So does that mean their day is over? We'll have to see. Don't like the candle pattern. And then ITA has just been a monster and super strong, continues super strong. Those are 2 weeks ago. I started piling into both of those sectors. And we talked about it on the Sunday video at that time. All right, let's JS. Right. This is one of my stocks, but that wasn't what I want to talk about. So let's first go into the top down. And let's just see percentage wise what were the leaders today. Industrials, utilities, financials. Let's include tech. No, we won't include tech because there's a bunch of these are. All right, these are the industry groups in those top three. Let's run them by percent. Let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So here's 292 stocks in the top 10 industry groups. Let's throw on a filter of 5 and $500,000. Now I'm left with 140 stocks. So there's a lot of things we could do. Um, just start going down the list if something looks like I want to buy it. This is close, ALV. So I'm looking for things that are coming out of a base and things that have not run away. I don't know if we're going to find them because this has been a very strong market. That's one way. Maybe I should rank them by their percent performance today. Problem with these are all stocks that have big moves. Hard to get in there. Oh, there's one that looks interesting. Galaxy Digital. Um, it's an IPO, so the high jump's not forming. It had a lot of volume today, big breakout above the 50. Great Lakes Dredge and Dock, to me, not the most exciting of names. Talon Energy. This is a data center play. You can open up here, see earnings not to February 26, 282 versus $1.81. So that's like 40% growth rate. Utility does not pay a dividend. Don't know if there'll be a surprise or not. So Talon had a nice breakout. If you're curious about the news, you can highlight it here. Um, it's buying something from somebody else. Okay. That one looked interesting. So I might throw that into a watch list. MATX, too far. So I haven't found a lot this way. This is here I am. This looks good. It was better a couple days ago here when it had the double momentum signal. This is what that's taking off. PST is another energy play, Vistra, that is a potential in the data center space as well. If you just put your thing there, integrated retail electricity power generation company, um, all kinds of energy, 38,000 megawatts. I know they've been talked a lot with data centers, and that one actually looks really good. And this is probably in the A scans. All right, I could look at which ones had the most positive impulses. And again, we'll go through the list. Matrix was too far extended. TLN we like. Morgan Stanley earnings play, big breakout today. That might be worth looking at. Goldman Sachs, the same. So again, I'm looking at different ways of dissecting the market. And then one could also pick that and see what comes to the top. How much does BlackRock mean to the market? It is the market. Big strong day there. Here's Talent Energy again. Looks good. Goldman Sachs, same stocks. So there are multiple different ways, but there's another way. If you want to go top down and apply it bottoms up, and let's look at A pluses. Are there any A pluses in this group? And we see one at Main Street. It has double momentum, great relative strength in OBV. It's not extended. Weak. It's got $1.06 coming in versus $1.02. That's not that exciting, but it is business development, equity capital, lower middle market companies. It pays a 6% dividend. That is exciting. Why is it breaking out? Can we get more data? It's not the February 26 earnings. We'll hover over here. My dividend growth strategy. So it's probably part of the rotation. Rotation. That one looks great. All right. How about looking for any of the A's? So BlackRock, to be an A, you've got to come out of a squeeze or in a squeeze. You have to have momentum or breakout. You have to have good relative strength in OBV and not be over 100 on the extension. And what are they? 91. So you have Carpenter, CRS. There's your Main Street Capital again. EPG, private equity. MRX, Merrick's Group. Too far down. And Jeffries Financial. So far, I'd tell you I like Maine. I like CRS. Now, that could be your night. We picked out several stocks from the different ways of looking at it. And PLN was another one that I liked a lot. Another thing that I could do is skip the top entirely, just a bottoms up approach. So I could take the entire market and do the same thing, look for my A plus. Just very quickly, AVNS doesn't look like much, but it just took out the 200, had momentum. Look at high jump when I'm sitting on the 200. There's no way that would be extended. Earnings are not to February 25th, 24 cents versus 43. Not that. I think, let's see. Nice breakout from a flag today. BKSP, Brightspire Capital, BUSE, a refiner, CWST, Sicela Waste. Just see if anything comes out and I like better than the ones we talked about already. It's interesting that here's your Main Street Capital, which I like a lot with that 6%. It's Penumbra was a buyout, so we don't care anymore about it unless somebody else comes in to bid. Another regional bank, I think. Medical devices. Manufactured home communities. Ugh. We used to call those tornado magnets. 24 cents versus 24 cents, pays almost a 5.6% dividend, and WAFD. So I'm still sticking to it. I still like Maine and that TLN be the most, and then the third one that we saw on the top down approach. And then let's go look at the A's, probably a lot of them, and there are. And let me just go through and see if there's anything I want to look at here. If I did it all for you, I'll never sell my tool to anybody. So I'm just showing you how I use the system. And I think I've looked at enough. Markets look pretty good here. I just think that they need a pause to refresh. I'm not expecting a mass pullback. I'm not expecting we go into a bear, but I am cognizant that seasonality says we run up to the middle of February and then those bets are off. But we need to pause. I need to pause and go to sleep. And I hope to talk to you over the weekend. If not next week, I'll be back home.